Chile is one of the most prosperous countries in South America, and as such is often held up as a point of comparison against its neighbours that have struggled with chronic instability and economic mismanagement. The reality is, though, that Chile is a very unique nation that, despite inhabiting the same general geographic region, has a lot more to do with countries on the other side of the world than it does with those on the same continent. That economic prosperity is also worth investigating as well, because alongside being one of the wealthiest countries in the region, it's also one of the most unequal in the world. Low taxes, lax regulations, and an ultra-business friendly environment have a lot of economists and commentators questioning if this is the secret to its success, or if it's sold its people, its resources, and its future for some good-looking economic metrics today. Concerns over that inequality are not going away, and the country is entering a dangerous position where its people have enough to fight for, but also not enough to lose by speaking out. Now, this by itself is something that we've explored many times on this channel, but beyond those internal problems, it's worth understanding what they could mean for its external interactions with the rest of the world. When we think of natural resources, we tend to think of oil or maybe iron ore, but they are relatively widespread, and even though there are cartels like OPEC to restrict supply, there are still a relatively diverse array of suppliers for people to get their dinosaur juice from. Chile, on the other hand, is responsible for exporting a third of the world's copper, right as this material is going into more and more manufactured products than ever before. It has become a mining powerhouse by being arguably over-accommodating of foreign resource companies. And if its people decide that they've had enough of giving their resources away, it could have major ramifications for the global economy. So Chile is more than a case study into the relative success of a South American nation or the issues of undertaxation and regulation. It's an important country to watch purely for our own selfish interests. So, how did Chile become the apparent success story it is today? Has that success really translated into a high quality of life for its people? And finally, could the country address these concerns without crippling some of the world's most important industries? Once we have done all of that, we can put Chile on the Economics Explained leaderboard. Energy use tracks basically one-to-one with the GDP of a country. The more energy a country consumes, the higher its GDP. But of course, a country requires new small businesses to create the opportunities that all kinds of energy usage, fossil fuels or otherwise, unlock. For a lot of businesses, this often means shipping directly to people's homes. That's where our sponsor for this video, Stamps.com, comes in. They have discounts of up to 89% off UPS and USPS, so you can send what you need to faster and cheaper from the comfort of your own home or office. It's all incredibly easy and takes no time at all with their apps, so whether you're mailing out checks, invoices, legal documents, books, or anything else, there's no better way to send out your business's branded mugs, subscription boxes, or quirky calendars. To make things even simpler, Stamps.com can connect with all major marketplaces and online shopping carts, so you don't have to spend tons of time copying and pasting details for every delivery. It can all be done for you. So keep your mailing and shipping moving at the speed of your business with Stamps.com. Sign up at Stamps.com/EE for a special offer that includes a 4-week trial, plus free postage and a free digital scale. No long-term commitments or contracts. Just go to Stamps.com/EE. After declaring independence from Spain in 1818, it took decades for the Chilean government to get its bearings, but the product of this political infighting resulted in the appointment of leadership with different priorities in comparison to its 19th century neighbours. As their constitution developed, it became clear that the major objective was to construct a government conducive to business. Of course, this doesn't mean that Chile was a pure democracy with the people's interest in mind, far from it. However, they did see periods in which administrations peacefully transferred power after, albeit lengthy, terms. And peace is the operative word here. Sure, terms were long, wars were fought, and the power transferred was to someone close to the previous administration. But Chile's initial domestic stability was something that many other Latin American countries couldn't or still can't achieve. Stability that would allow the country to focus on economic goals without them being undone by a continual wave of political shake-ups. By 1870, Chile started with its first major set of mining projects, with its GDP per capita twice that of Mexico's by 1896. Shortly after, this compromised stability was briefly interrupted by a civil war, stemming from a desire to change constitutional law coming into the 20th century. After that, Chile began leveraging its resources to invest into infrastructure projects, education, and other public benefits. That encouraged skilled labourers from Europe to settle in major port cities. It's important to note that Chile's early period of peace helped encourage industrial growth, because what followed would leave them stagnant for almost a century. The Faustian compromise of strong leaders that at least kept the economy on track started to fall apart, which triggered a series of internal conflicts that would force Chile to join many of its unstable neighbours with its own series of coups, often born out of the desire to improve working conditions. It was not until the 1980s, when the reigning regime faced pressure from the opposition following the end of an 8-year term, that Chile started to heal politically and economically. So the country went from success to failure and back again, which for obvious reasons is very interesting to a lot of countries in South America and the rest of the world for that matter. So, how did they do it? The country's recovery period was a bit of an economic miracle. Emphasis on a bit because it took a tremendous amount of work and, more importantly, restraint to get Chile back on the map as an example of Latin American prosperity, at least on paper. The origin story of how this came to be was quite bizarre. A lot of Latin American countries have state-owned enterprises, and a lot of countries abroad make it work. Norway's a perfect example of that. But in a lot of South American countries, where the systems aren't finely tuned to check and regulate management, well, corruption and embezzlement, it's been known to happen. Starting in the 70s and 80s, before democratization, Chile started to privatize with the guidance of a group of economists known as the Chicago Boys. At the time, Chile was a developing country in the civil law tradition. Chilean business groups were young and steady, and at the start of the 70s, only about 20% of publicly traded firms were affiliated with a business group. By 1990, this affiliation rose to about 70% for publicly traded firms, with outside businessmen replacing much of the bureaucratic aristocracy that had been in control for decades. This was a result of what one would call a re-education program, perhaps the most controversial economic story in Chile to this very day. Until about 1973, a majority of Latin American countries operated their economies based on the principles held by the United Nations Economic Commission for Latin America and the Caribbean, or ECLAC. A strong state, protectionism, and inward development prioritising industrialisation as a way to emerge from underdevelopment. Of course, this is just a colourful way to say that the continent shared an interest in state dominance, feeling that free market competition was not the only way to enter the modern industrial landscape. But this was all happening at the height of the Cold War, and the bald eagle country up north was not about to lose ground, so they developed a long-term plan with Chilean elites. They sponsored an agreement between the University of Chicago and the Pontificate Catholic University of Chile, or PUC, signed back in the 50s that enabled the exchange of professors and postgraduate fellows. Now, a quick side note is that the University of Chicago has historically been a huge proponent of the virtues of the free market, and has a reputation for generally touting the virtues of deregulating as much as possible to let competitive business do its thing, unrestricted by inefficient government meddling. Most famously, this Chicago school of thought is associated with Milton Friedman, who was a professor there at the time, but it was largely supported by the rest of the faculty as well. Anyway, this Chile project brought 26 Chilean students over to Chicago between 1956 and 1964, where they were later sent back to take over the PUC School of Economics. When on the rise back in Chile, if the Chicago boys were asked about their vocation, they would say that they were passionate scientists who were driven solely by objective truths, but many today argue that their motives were far less pure than they made it out to be. Regardless, this was a slow-moving process. It wasn't until 1975 that the leader of the Chicago boys was named Chile's economic minister, where they started making efforts to combat the hyperinflation caused by the last active administration, efforts that would not have been possible if the current government hadn't given them almost total autonomy. These extreme circumstances gave them the power to enact their own brand of economic shock treatment. The Chicago Boy objective here promoted drastic cuts in public spending and social investment. Industrial production fell 28% in 1975, while GDP was down 12.9%. The hope remained that things had to get worse before they got better. Once the signal was given, the government opened the economy quickly, which involved liberalising prices. Customs fees were lowered from a maximum of 94% to a blanket 10% duty, and some higher taxes were completely removed. At its peak, almost all Chilean industry was privatised, along with sectors like health and education, in an effort to awaken a sense of competitiveness in the Chilean economy, and for a short while, it worked, at least partially. Inflation remained high, but it did drop from over 200% to an annual average of 79.9%, and the open market strategy did encourage more trade and competition. But then came the real challenge that ended the Chicago boys' active participation in the Chilean economy, something that plagues developing countries all over the world: export dependency combined with antiquated policy. When the price of copper fell, along with the country's other main export commodities, the US dollar was simultaneously appreciating. With a rise in interest rates, Chile's stagnation became a huge problem, and these recent improvements and long-standing export strengths were no longer insulating them from changes beyond their borders. A major reason for this was that the Chilean central bank had pegged its currency to the US dollar in 1979 with an emphasis on lowering the rate of devaluation. Again, the country's aim was to drive inflation closer to international levels. The government also believed that the pre-announcement of the devaluation would help to remove uncertainty and align domestic interest rates with those abroad. They lifted trade restrictions, reduced tariffs, all in an effort to tell the world that Chile was once again open for business. But new and old policies proved to be non-compatible. Slow-moving capital restricted outflows, and most long-term lines of credit being subject to approval from Chile's central bank, a financial crisis became inevitable. With a problematic indexation model that automatically adjusted wages with inflation, it caused a runaway price spiral. GDP fell by over 14% in 1982, with unemployment skyrocketing to about 24%, severely damaging or outright destroying a large portion of its banking sector. Shortly after the crash started, the Chicago Boys were disbanded, and a revolution using an 8-year term agreement in the regime's constitution restored democracy for Chile and its people. And this is where things get really interesting. After Chile's transformation, it only took about 1 year between 1982 and 1983 for the country to begin to recover, and since then, Chilean GDP has continued to climb with relative stability into the present day. Of course, much of this is because of Chile's legendary status as a global provider of copper. As the world's largest producer, Chile is responsible for 1/3 of the entire planet's output. And this isn't expected to change anytime soon. If anything, Chile will most likely benefit from increased demand, as a significant amount of modern tech relies on the metal's conductivity to function. There are other parts of the Chilean machine that are proving to be quite competitive as well, with a 2022 report showing that agriculture and related sectors represented about 27% of national exports. At the moment, the Chilean services sector dominates the pie though, contributing to 54.3% of the country's GDP and employing about 70% of the country's population, very much in line with most advanced economies. These are good numbers that, on the surface, should translate into almost universal lifestyle improvements for the populace. And yet, what has been good for Chile hasn't necessarily been good for Chileans. See, when the Chicago Boys left, their controversial policies, for the most part, didn't. Sure, some of the dramatic privatisation was tamed in an effort to improve and restore social programs, but the perhaps overly business-friendly regulations, or lack thereof, remained. Between 1990 and 1998, the previously crippled Chilean GDP grew 7.1% annually, inflation fell to 11.7%, and unemployment dropped to 7%, while poverty decreased steadily to reach 8.6% in 2017. For some, this economic prosperity was the product of the Chicago Boys' effort to set the economy free. They argued that the economic miracle may have occurred after democratization, but that economic policy, by its very nature, is slow-moving, meaning that all the benefits the Chilean people have today was born out of the seeds planted in the 70s and the early 80s. In short, they surmise that the government's acceptance of the policies after the revolution is in itself proof that the economy would not have improved without them. To the critics, this is an incomplete story, and they have a fair enough argument. The primary reason has to do with the effects that this miracle has had when it comes to wealth distribution. Yes, Chile has an impressive per capita GDP for the region, about $16,500. However, half of Chilean workers earn $6,320 or less annually, or about $550 per month. About 50 to 60% of income is earned by the richest 20% of Chile's elite, which in turn makes wealth inequality even worse, as it's very hard to save money on an income that is relatively low compared to the national average that is dragged up a lot by the people at the top. Between 2019 and 2022, Chile experienced a catastrophic series of protests, costing an estimated $3.5 billion in damages to property, resulting in the loss of about 300,000 jobs. In recent years, the government has been progressively more and more open to making concessions, even going as far as offering to change their constitution to appease the populace. But it's going to be hard to appease these demands without spooking the international companies with large operations in the country that are responsible for a lot of that headline success to begin with. So, can the country address these concerns without shaking up global supply chains? Well, social reforms might be a good start. Taking some of that headline wealth and putting it towards simple things like public education can not only give its workers an opportunity to compete, it can also just generally increase overall productivity. The problem with these idealistic solutions, though, is that they take time. Investing in the education of a child today isn't going to provide economic returns until they are a productive member of the workforce. Now, the good news is the situation is slowly improving. Today, income inequality as measured by its Gini coefficient is right in line with the USA, down significantly from the extreme levels of the 1980s. Though, to be fair, the USA is not exactly a shining beacon of social equality, and perhaps more importantly, it's a much richer country overall. So, even though the distribution of income may be similar, poorer US workers are still sharing in a much larger income pie overall. Either way, if Chile wants to make real changes to maintain its reputation of stability in Latin America, it'll ultimately have to introduce reform that diverts much larger sums of money to the underpaid labour forces in demanding industries, which seems to be what at least part of the system is encouraging. They'll also need to diversify. Even if the need for copper and lithium is on the rise, leaning on a non-renewable resource has never proven to be sustainable. On the face of it, Chile is a prosperous economy with the highest GDP per capita on the continent, even in the wake of recent events, but it's a country plagued by the kind of inequality that can genuinely undermine a lot of that stability and growth. Even if it's not an outright revolution, people in tough situations will support political figures that offer more extreme solutions to these pressing issues. Alright, now it's time to put Chile on the Economics Explained leaderboard. Starting as always with size, Chile has GDP of $335 billion, making it the 45th largest economy in the world, just behind Pakistan and just ahead of the Czech Republic. Despite its relative stability and prosperity, this still puts it behind Brazil, Argentina, and even Colombia amongst its neighbours by raw output alone, and it gets a 6 out of 10. Now, largely that's just because Chile has a significantly smaller population than these other countries, only been home to 19.5 million people, which means its GDP per capita is significantly higher at just over $17,000, and this makes it one of the most productive economies in the region on a per capita basis, only falling slightly behind Uruguay and Guyana, which are both much smaller economies overall. This puts Chile about 50% above the global per capita GDP average, and it gets a 6 out of 10. Stability and confidence is good for the region, which has made it a popular destination for international companies and operations that want to do business in South America, but don't want to be directly exposed to the political instability that has plagued many of the other countries. Chile has had quite robust monetary stability, good property rights, and the second lowest levels of perceived corruption on the continent, again just behind Uruguay. Now, it's still not perfect by any means, and an over-reliance on natural resources and a general pushback against the free reign that businesses have had in the nation over the last 4 decades could shake things up again, and, to be candid, being the most stable country in South America is like having the best teeth in the UK. Anyway, it gets a 7 out of 10. Growth has been strong, albeit a little bit shaky over the last decade, with ups and downs caused by changes in commodity prices and investment inflows. It's still moving in the right direction though, and it gets a 7 out of 10. Industry is helped a lot by its business-friendly environment, but there is a balancing act to be found here. There's a difference between making things easy for new enterprises to get off the ground and letting international companies walk all over the economy. While it's arguably still finding that right balance and relying so heavily on natural resource exports, it gets a 6 out of 10. Altogether, that gives Chile a very respectable average score of 6.4 out of 10, which puts it up here on the Economics Explained leaderboard. To see how that stacks up against its slightly less well-managed neighbour, you should be able to click to the video we made on Venezuela on your screen now. Thanks for watching, mate. Bye.